So we'll just give it a minute for some folks to come in, and then we'll get the ball rolling.
And timing wise, are we all in the same time zone or?
Yes, we all should be in the same time zone. Yep. Yeah. So it's 1:45 and we're done for 2:30, but yes.
Okay.
I don't think we have any boards that are far enough west that they're in a different time zone. So. All right, well, we will get the session started. So hello, everyone. Welcome to our next session called Getting and Building Good Credit Habits. I'm happy to introduce Farah and Naina, who both work for the Royal Bank. As a long-standing customer of the Royal Bank, it's nice to see you out doing good work in the community. Farah is a branch manager and Naina is a financial advisor, and they are going to share some insight and hopefully some good tips for everyone to start early on building good credit habits. So welcome to you both. I'll let you take it away.
All right, perfect. Thank you so much, Michelle. We're happy and excited to be here. Yeah, what a topic, that you can see on the screen is getting and building good credit habits. And I know many of us here, we've heard the word credit so many times, and it's really important for us to understand what it actually means and how it can impact our life with the decisions that we want to make going forward or the plans that we have for ourselves. So we're here to kind of, do that for you, answer questions and give you some good information, and hopefully it'll be easier for you when it comes to, figuring out what kind of credit you'll need for yourself. So the next slide here is myself. So I'm that tiny little square on the screen. I probably have a little bit more makeup on that picture, but it's the same person. So my name's Farah Mohammed. I am the branch manager for one of our locations in our East Toronto area. I started the branch as a teller and been able to grow my way since then. A lot of opportunities, but I think one of the things I love is just the volunteer work that we get to do with RBC out in the community. I just love it. So yeah, I'll continue to be here. So that's a little about me. Let's find out what our time's going to look like today. So we'll have some welcoming remarks. We'll dig right into why we're all here, getting and building, good credit habits and learning all about it. Before we do that, you'll get to meet my colleague, Naina, who's on the line as well. And as you can see towards the end, we do have some time for question and answers. So I highly recommend if you have any questions, please feel free to utilize the chat box and put your questions in there. If you're like me and you have a question and if you don't ask it, you'll forget, use the chat box and put it in. And once we come to the end there, we can definitely get that answered for you. All righty. And so, who's RBC? What are we all about, right? I know many of us think, well, RBC, yeah, it's a place I can pay my bills. It's a place I can take money out. It is so much more than that. Today, I think, is really proof of that. We are here to really be part of the community and provide information that a lot of people need. Whether you're born and raised in Canada, it doesn't matter. We all need to learn a little bit more. And so trying to help the future generations that are coming up. So RBC's purpose is helping clients thrive and communities prosper. Our vision is to be amongst the world's most trusted and successful financial institutions. But, just like us, an organization must also have values. And so we put client first. We earn the right to be our client's first choice. Collaboration, we believe in teamwork. Accountability, we take ownership and responsibility. Diversity and inclusion, one of my personal favorites. I love working for an organization where I see, people of many different backgrounds and backgrounds, religions, cultures, all of that great stuff. And we're all together as one, as a team. And integrity, we hold ourselves to the highest of standards to build trust. So that's a little bit, who we are and what we're all about. So the next time you walk by an RBC, know that it's more than just a place you can take some money out from. All righty, so I'll pass it over to my colleague, Naina.
Thank you, Farah. And it's so nice to see all the crowd in here. I don't want to take too much time introducing me and not getting able to complete the whole session about credit, because this is my personal favorite session, which I really, really wished if I was able to hear that when I came to this country back in 2018. I'll give you some examples of my personal experience as well on the go. So I came, as I said, in 2018. I studied global business management from Centennial College. That's where I started. And after that, I have done multiple jobs, like part-time jobs, full-time. I have done multiple. But it was in 2021 that I joined RBC as a banking advisor intern. From there, I have been in 4 different branches. Finally, I'm a financial advisor, and I am working with the the meeting place Evolve branch at Midland and Lawrence. That is where I'm located right now. I'm so happy that I was able to be part of the newcomer specialist team, and still continue to be being around with the newcomer specialist team. That is one of the favorite part of my job. Enough about me. I do wanted to let you know before we start, to give some examples about how is credit really important, and what are some of the things that we have to do. So in simple terms, like, what does credit mean? All we know is that we have a credit card, or we might be having a credit card. We will be getting a credit card once we turn 18. So 2018 was the time when I got my first credit card. It was my first and very most credit card. I used it to purchase something with the intention that I will pay it back in the future. That is exactly what credit means. So it is the ability of a customer to obtain goods and services before making any payment, based on the trust that you are going to make the payment in the future. Similar way to how credit card works. So that is a simple term, what credit means. Now, there are different players that is involved in credit. I want you to take a moment to think about this. What or who are the different players in credit? So when you think about a credit card, I own a credit card, so I am a person, right? I am involved in the credit card, which is the customer or the client or the borrower. So that is the first player. Now, the second player is the person who is giving you the money, which is the financial institutions maybe, or some other places which gives you credits, which is the lender. That is the second point, the person who is allowing someone else to use their money. And we have a third category. It is not a person actually, but this is a main important player, which is called the principal. So it is the amount that you borrow. So we will be using the term principal a long way along today's session, because this is the term that we use, and we want everybody to be aware about the term, which is called the principal, or the amount that we borrow. So these are the players in the banking, or when it comes to credit. Now, I want all of you to think a moment. Consider me as your best friend. You can use the chat box to I think you will be able to access the chat box to put in the messages. Let me just go back. Yes, so you can use the chat box to put the messages in here. So consider me as your best friend. You know me for 5 years. Okay, you know me very well. I'm your best friend. I am coming to you asking for a $15, 1-5. How many of you are willing to give me the $15? I'll give you a minute to put that in the chat box. You can say yes if you're willing to provide me at the $15. You can say no if you're not willing. There is nothing wrong in that answer. So I'll just wait. Thank you so much. I see a couple of answers that's coming in, which is a yes. Thank you so much. I'm happy to hear that. So let's say after 2 weeks, I came back. I provided you back the $15. And then a month later, I'm coming to you and I'm asking you for a $500. How many of you are willing to give me the $500? Imagine that you have the 500 with you. You have the money with you, and then I'm coming to you and I'm asking for the 500. How many of you are willing to give me the $500? Okay, I see no coming in. Not me, that's a bit too much. I agree that. I would ask, what would you use it for? And if it's a good reason, I may say yes. 500 is a big jump, probably not. Great answers. Only if you have e-transfer, okay, that's good to hear. That's a new answer that I have never heard before. Like, only if you have an e-transfer. Great thinking process. I like it. Now, let's say the people who said you might give, I'm going to ask you one additional question here. What is one reason why you said yes? And people who said no, what is one reason, other than it's a huge amount, what is one reason that you say no to it? Okay, I'll give you a minute. I know it's a huge question to think about, but I'll give you a minute to think and give me an answer. What is one reason why you will say yes? And what is one reason why you will say a no? Worked hard for that money. I really like that answer. Because you're my best friend, I would help you in any time you need it. Great. I said yes because you have shown me that trustworthiness in terms of paying it back. Perfect. Because you showed me you give me the money back again. Yes, thank you. It is not actually an investment. I never said that I'm going to pay you the interest. So great thought process there about the interest. Great. You never know what someone is going through. They might really need it or really appreciate that. Great thought process, guys. I really appreciate the answers coming in. Yes, that is exactly what the financial institutions will also think into. So I'm going to show you what are some of the reasons why I asked this. So the amount can change. So do I have that extra cash? Like, do I have the $500? It is my hard earned money. Like, if I give, will I get it back? Is this person trustworthy? Same as you said. Are they going to keep their promises? Do they have the money coming into the account for making the payment back? Are they currently working? Did they lose their job? Why are they keeping on coming back asking for the funds? When will I get my money back? Is it in few days? Is it few weeks or few months? Like the $15, it's a small amount they gave me, but $500, how long will it take for them to give me back? These questions are the same things that the financial institutions will also look into when they are giving you the money as well, whether it's a credit card, whether it's a loan, or whether it's something else as well. So these are the same things that the financial institutions will also look into. So great answers. I really appreciate that. Now, somebody told me about investments in there. Yes, if you're lending money, you are expecting an interest. Why? Because there is a risk that this money will never be paid back. At least you can get the interest to cover, and they know that, okay, I'm charging or I'm getting charged interest. I don't want to pay the interest. So they will give me back my money way earlier. That is exactly why the financial institutions charge the interest. So the lenders charge interest for the risk of lending their money. Now, one rule that I want all of you to think about in the mind is, or keep that in your mind, is borrowing is never free. It comes with a charge, and that charge is called interest. And when you're paying it back, you always pay back the principal, which we mentioned earlier, which is the money that you borrow, plus the interest. That is the amount that you repay. That is one rule of borrowing that I want everybody in this room today to take along with you. Moving forward, I hope everybody have a credit card or have seen a credit card statement. This is an example of a credit card statement. This is an RBC statement, but the content remains the same. There is no issues with the contents. The contents remains the same, whatever financial institutions or whatever credit card it is going to be. So there are three things I want you to take a look today at the credit card statement. First one is the minimum payment. Second one is the new balance. And the third one is the payment due date. I'm going to tell you why this is important. So if you have a credit card, a statement will be generated which will have all these three information. The minimum payment is the amount that you have to pay before the due date. So those two things come together. So the minimum payment is a minimum amount that you pay before the due date. Why? Because you want to build your credit score. If you don't know what credit score is, don't worry. We'll be talking about it. If you know, that's great, but don't worry about it. We'll touch on credit score a later session. So just keep in mind that if you want to build your credit score, you need to make sure that you at least make the minimum payment due before the payment due date. Now, why is new balance important? How many of you will love not paying interest? I will definitely love that. If you have the money, always, I'm specifying it, always make sure that we pay the full balance before the due date so that you don't have to pay interest. Isn't that great? From the statement generation date, you have 21 days, which is your payment due date. And if you make the full balance before the payment due date, you don't have to pay interest. And that is why it is really important for us to check this. Now, let's imagine an example. Your balance is $10,000. You don't have the money. but you only have $500. At least make that $500. Or your minimum payment due is $100. Make that minimum payment due, because you don't want it to be reported as a missed payment on your credit score or credit report, and then your credit score going down. You don't want to see that. That is why it is important for us to make the minimum payment. Okay, I hope you guys get an idea about how credit card statement works, what are the things to look into, and how to make the payments. Now, there are different products in Canada. The most three popular products in Canada. The first one we already discussed about it, which is the credit card. The second one is the personal loans, and the third one is the line of credit. I'm going to touch quickly on all three of them. So credit card is the first one. It is for online purchases or smaller purchases or day-to-day purchases. Now I know tapping can be a huge problem. That is what has happened to me. I was using my credit card to purchase something which was a huge amount, which was $1,200. I used my credit card and I was only making minimum payments on the credit card. At the due date, I made minimum payments. You know what happened? I was charged interest. It went high. I was in a situation where I was not able to make the payments. My balance was going up. I was never seeing it going down, even though I was making the minimum payment. I had to sit with an advisor, and they gave me the information. They helped me to create a budget, and then that's how I built my credit score back. I'll be very honest with you. It took me 2.5 years to build my credit score back to normal. So it is not easy, it takes time, but it is doable. That's what I was trying to tell you. It is doable. If I can do it, anybody can do it. All you have to clearly do is keep track of what you're making as a purchase. Now, when you're purchasing, you also want to make sure that what is the credit card like, or how does it work? That's what I'm going to give you information here. There are two different types of credit cards. One is secured and the other one is called unsecured. Usually credit cards are not secured. If you think about your credit card, have you put any money or anything to get the credit card? No. You have pulled your credit, you have applied for the credit card with your study permit, your work permit. That is how you do that. So it is usually unsecured. Now, the interest rate is pretty high with credit cards. We already discussed about interest, the same reason. If your credit card is being given to you, it is unsecured, and there is always a risk that it is not paid back. So to offset that, the interest is usually high. And the term is discussed as 1 year. So there is annual fee for the credit cards. So there are credit cards which have fees, and there are credit cards which doesn't have fees as well. So you make the payment towards the credit card, like not the payments, like the annual fee towards the credit card on an year-end terms. So that's why it is called as a year. Now the payments. We discussed about the payments earlier, but specifying it one more time. If you're able to make the principal or the amount borrowed before the due date, which is 21 days from the statement generation date, you don't have to pay interest. Always keep that in mind. This is the sweet spot, and I really love it because I can use the credit card. I get the 21 days, I pay it back, I don't pay the interest. Now I enjoy this because I have ruined it earlier and I was in a situation where I was not able to pay. But now I enjoy doing this. I calculate how much I'm spending, I pay it before the due date, and I don't pay any interest. This is how we should be using the credit cards. I hope you guys get an idea about how credit card works. Moving on to personal loans. I hope you guys have heard about personal loans. There are different types of personal loans. We have car loans, that is a personal loan. We have educational loans, that is another personal loan. We do have mortgages, which is another type of a personal loan. So there are different types of personal loans, but the purpose is for major purchases, long term, and the security depends. So I'll give you an example. Educational loans, there is no security. You can just get the educational loan with your employment, with your study permit, with your enrollment letter for the college. So educational loans are mostly not secured. On the other hand, if you look at the car loan, your car works as the collateral. What I'm trying to say here is, like, let's say you missed a payment on the car loan or you're not making the payments. The financial institution who gave you the car loan has the right or will sell the car, get the money, and then will close the loans. If there is any remaining balance from that, you will have to pay it. So that's how car loans works. So it is secured. Mortgages, yes, the home is secured and it is acting as a collateral. And if you fail to make payments towards the mortgage, the property will be sold and the money will be taken to pay the mortgage. So yes, it can be secured and it can be unsecured too, depending upon the type of the loan that you're applying. Now, the next one is interest. Usually it is 5%. Right now it is a little bit higher and the term is 1 to 5 years. That's how it works. Payment, you can select the payment method. It can be weekly, bi-weekly, monthly, it differs. Line of credits is a little bit different from loans, but this is the sweet part of the one. I love line of credits because it is available for you on demand. Whenever you need it, you can take it, you can pay it back, and if you're not using it, you don't pay any interest. And the interest rate is usually low compared to any other products, like personal loans or even the credit cards. So when we compare it, it is lower. Again, the security is sometimes secured, sometimes unsecured. Term is flexible. Again, you can have it as long as you're taking care of it in a good way, it will be available for you. Again, the payments, you can make it weekly, bi-weekly, monthly, bi-monthly, it's up to you. So these are the three different major kinds of loans that we have in Canada, and there are more as well. So I hope you guys get an idea about how these things work. Now I'm going to pass it over to Farah to talk about getting credits and credit scores.
All right, perfect. Thank you so much, Nina, and thanks for breaking down the different types of credit that we have access to, and the reason why we would need all of them, right? You want to buy a car, putting it on a credit card is not the best option, right? And so it's important for us to know the different types and forms of credit that's available. All right, so continuing in the section and on the topic of credit, there are many reasons why someone would need to have access to credit. So, like I said, maybe you want to buy a car, maybe you want to start your own business. You want to go to school. There's so many reasons why people would need to have access to credit. Maybe someone is short for rent that month and they need to, get some money until they get paid again, right? And so, so many different reasons why. And so this screen here is an amazing amazing slide because it really breaks down the steps of what the bank looks at. So anytime you want to borrow money, lenders like RBC will look at a number of factors, and so we call them the 5 C's of credit. So on the left-hand side of your screen, we start with character. So this is how responsible you are when it comes to managing your finances and taking responsibility of your debt. Next, right beside that is your capital. And this is the amount of money you have available to you from your savings. So it could be from investments, anything like that. And then right after is your capacity. And so this is your ability to repay your debt. Right after is collateral. So this is, basically any assets that you can provide as security for a loan. So like Nina mentioned earlier, you have a car, you can kind of use that. Do you have real estate? Do you have investments? Things like that you can kind of have in place. And then the final factor is your credit history. And so that is essentially your track record for repaying loans and paying your bills on time. So out of the 5 factors, this is the most important because it really shows who you are as a person. Those of you who answered Nana's question earlier when she was asking to borrow money from you, based off of your history and how well you know her as a friend, that's really what determined if you're going to lend her money or not, right? So when it comes to the bank or any lending facility, they're going to look at the same thing as well. So I hope that kind of helps you understand what we look at when you come in to borrow funds. All righty. So next slide here. The moment you start using any type of credit, a credit report starts to get built in your name. Anytime you apply for credit, the lender now can have access to that report to see your credit history, your history of being able to pay your bills on time. So you hear a lot of things thrown out today. You've heard credit report, credit score, credit history. They're all very important, and so we're here to kind of break that down for you. So your history is basically all that you've done, who you are as a person. That gets all recorded. And that is put into a report, right? So we can have a breakdown to see who you are as an individual. Your credit report is a summary of your credit history, and it lists things like your name, your address, your social insurance number, and then now, the credit cards that you have, the types of credit that you have, the loans, how much money you owe, are you paying your bills on time, are you paying them late? And a credit report is important because, businesses want to know about you before they lend you money. They want to know about you before they can give you access to that funds. And so, are you a person who pays their bills on time, or are you always late? So they really want to get those answers before they make that decision. All right, so let's go to the next slide. Nina had mentioned something about credit score earlier. And so this is a great pie chart here, or, half a pie chart here to break that down for you. So this is a picture of how well you manage your money, whether you've paid your bills on time. And so really, depending on how well you do that will determine where you fall in this chart. So just like a test, the higher the score, the better. So on the right, you will see that we're anywhere from 790 to 900 is excellent. And then when you look at the opposite side, 300 to 559, that usually means that we're just starting, or maybe we didn't do so good. But as Nina mentioned, there is a way to rebuild your score and to build your credit back up. It definitely takes time and patience, but paying your bills on time and ensuring that you're taking care of your debt will help you to get to that number. And so why are these numbers even important? Why are these scores even important? Later on in life, maybe when you want to apply to have a loan for a car, maybe you want to buy property, you want to get that condo, that downtown life you have always dreamed of, or maybe you want to, be out in the suburbs somewhere. It doesn't matter. When you're applying for a mortgage or you're applying for something like that, you are going to need to have a good credit score in order to qualify for things like that. And so building your credit will help you to achieve those goals and dreams that you may have, later down the road. Okay. So the next pie chart, it's actually a pie here, is what makes up your credit score. So there are several factors here that influence your credit score, but there are two most important factors that really have a huge role. So first is your payment history. So of course, you want to pay all your bills on time. Paying them late or having your account sent to a collection agency will have a negative impact on your score. And the next is credit utilization. So this is, how, also known as balance to limit ratio. So in other words, you don't want to max out your credit. So try to keep a month-to-month balance of less than, I would say, 50%. That may differ depending on who you're talking to. But, if you have a high balance that you're carrying month to month, that is going to affect it, because that really sends some red flags, right, to whoever that lender is. Are you having a hard time paying? It seems like, it may be a bit challenging for you. And so, red flags, right there. Some other things to look at on the screen here is new credit application. So how frequently are you applying for new credit? That will affect your score. I will say, this time of year, as we are heading into the holiday season, you will notice that there are going to be a lot of booths in the malls that you go to, a lot of stores, and everyone has some sort of offer that they're trying to provide. If you buy and you sign up for a credit card, you'll get some sort of discount or some, free gift. Just be mindful, if that's a credit card that you are going to be using and it's a place that you shop at and it makes sense, then great. But if it's not something you're going to be using and it's just that one-time offer, is it really worth it for you to have your credit pulled, because it will affect your score? And if you're trying to achieve things like wanting to buy property or things like that, then it will bring your score down, and that may affect your plan. So just kind of, have that, in the back of your head. The other things there are, credit variety. So what are the type of credits that we have? So Nina talked about 3 of them: credit cards, loans, lines of credit. Do you have like 15 credit cards, or do you have a mix? Do you have maybe a couple credit cards? You have a line of credit, you have a car loan, right? So that also kind of shows. And also, of course, account history. So how long have you had your account? That also earns you points. So are you opening credit cards and closing them and not really having a chance to build history there? Or have you had something for the last 10 years or 15 years that really shows who you are as an individual, right? Where you've got to build, that history with. So I have a credit card that I've had since I was 18. I don't use it as much, but I do use it maybe once a month just to maintain that history and that long-standing account that I have with them. just to give you, an idea. And then, just having too many, right? Having someone who has access to too much credit and you're still applying for more credit, right? That is also some warning signs of financial distress. So, keep in mind whether you're using that credit or not, it is something that you have access to, and it's what the bank sees. Now, where can we get information about our credit score, our credit report, all that sort of good stuff? There are 2 national credit bureaus in Canada that collect your information and generate your credit report and your credit score. So on the screen, you can see there's Equifax and TransUnion. I just want to, just kind of point out there that there will be a lot of commercials. There'll be a lot of other sites that you will see that they will offer you information on your credit report and credit score. But this is the source. This is where they're getting it from. And so, why go through a third party if you can kind of get it right from here? I would highly suggest, because every 12 months you can get a free report from, from the facilities there. And you should definitely request your free report once a year to make sure that the information is true and accurate. And why do you want to do that? Simply because you just want to make sure that it is you who is on that report, and it's you that is the one that is applying for that credit, and everything that's there matches you. This is a great way to find out if there's any fraud that's happening, if there's someone maybe that's stolen your identity and is opening credit under your account, or sorry, under your name. It's a great way to spot that and to catch that, and to have things in place, to prevent it from happening in the future. But, go in there and check it out. For those of you also who bank, with RBC, you do have access to that through your online banking, where you can find out what your credit score is. And if you don't, that's no problem. I'm sure the respective bank you're with has something similar. And if not, as I mentioned, you can definitely go to Equifax and TransUnion to get that information. All righty. And so last part for today is really heading into it and just talking about some good habits that we can have in place to help ensure that we're, having those good habits to get us the score and the report that we would like. Definitely start early, pay all your bills on time. That's the first one on the list. Having them go, as I mentioned, to a collection agency, that definitely can have a negative impact on your history and score. The second thing on there is you're going to want to reduce your debt. So look at the debt that you have and see what has the highest interest, and focus on that. Try to get rid of that one first, because you're definitely paying a lot in interest with that. So eliminate that one. And then, correct any errors on your credit report. As I mentioned, checking your report annually to ensure its accuracy is a good way to prevent fraud and keep your history clean. And use your credit cards responsibly. Unfortunately, there is a bill coming at the end of the month and it has your name on it. And so sometimes how easy it is for us to just kind of tap a card and have purchases made, we forget. And then you look at that bill and you're like, oh my God, was this me, or is there fraud that happened here, right? And you know what? And many times it's just us, right? We just get tap happy and we're, shopping away. So, be careful, remind yourself, set a budget, whatever you have to do, but remember that there is a bill coming and it is coming, for you. And honestly, the only way that we can really, do this is to start early and to be patient. Good credit behavior takes months and even years to build, and, with your score as well. So that's why it's important to learn the necessities now, and keep in mind that every time you apply for new credit, it does show up on your score. And so if that's something that you want to prevent from happening, if you have goals and plans for yourself, just make sure that you know ahead of time before you make those decisions. But that will bring us towards the end of our presentation today. I know it's a lot of information to soak in this time that we have, but I hope that you're able to gather something and to take back with you to help you make more informed decisions when it comes to credit. As promised, though, we do have a question and answer period. So, put your questions in that chat box and we can definitely get to them. But thanks so much for your time and listening to us today.
Thank you so much, Farah. There is a lot of information, as she said, we have covered today. I'm just going to put the QR code up here if you would like to scan it, save it, screenshot it. Myself and Farah's information is there, so you can reach out to us if you have, if you're not able to cover all the questions up here. But we do have a couple of questions in here. I see what is line of credit, the first question. I hope you got an idea while I was telling. If not, just type the question in and we can cover it in detail. But the next question we have here is like, do you pay interest on educational loans, or is it the same thing as the credit cards, where if you pay within a period of time, there is no interest? So just to touch on that, we do have different types of educational loans. We do have student line of credit, that is one of the line of credits, and we do have OSAP as well, which is something that the government provides. So when it comes to OSAP, it's different. When it comes to student line of credit, it's different. So Lina, just to give you an idea, while you're studying, you do get the benefit of being a student, and you don't have to pay the interest, or it is a limited or lesser interest rate depending upon the course that you're doing. And after that period, the interest rate changes and you will have to pay it. When it comes to OSAP, it's completely different. You don't pay anything for a particular time frame, and then after that time frame, you start making the repayments. And also, when you're doing the repayments, it is for a particular portion. Monica, do you want to add something on top of that? Okay, perfect.
Yeah, sure. I can add to that. In short, the answer to your question is there is still interest on these products. The bank does have to make sure we are getting something for our investment in you. Like Nina was saying, there are different types of these products. If you are in medical school, or some institutions also offer special lines of credits for chiropractors and lawyers, where the interest rate is extremely low. And our educational lines do also have lower interest rates. They're normally not in the form of a loan. That's more of what OSAP would be, like Nina was mentioning. And OSAP does still collect interest as well. You just wouldn't end up paying that until your study period is over. But the educational lines, yes, they do still have they still have interest, but it is a lower rate.
Thank you so much for
that question.
Yes, it do. It is a little bit more detailed. I really appreciate putting that in. So moving on to the next question. So what if my monthly balance is high, but I am paying it back on time? I will definitely tell you it is a problem. The only reason is, as Farah mentioned during the pie chart, like the chart, like what your balance is a problem. You have to, or you should be able to put it in between 30 to 50%. I will say, if you can bring it to 30, that is great. If you're not able, it's okay. At least 50, not more than that. Why? Because if you're using more than 50%, it is telling like you are living on credit. Yes, you're paying it back, but at the same time, you're using more of your credit. Now, there is a trick for this. Reach out to me. I'll give you the trick, because taking the time or considering the time, I won't be able to give you the trick in here, because I have to show you the statement date, I have to show you the due date and how you're making the payment. But I can give you one tip here: make two payments, one before the statement is being generated and one before the due date. That's how you play around if you want to use more than 50% of your credit limit. Hope that answers your question. Now, the next question that we have here is, my parent has mentioned if we check our credit score, so often it lowers. Is that true? It is true and it is false. I'll tell you why. As Farah mentioned, Equifax and TransUnion are the two credit bureaus. If you go there and if you check your credit more than one time a year, it reduces your credit score. You can check once, it is free. But if you're checking the second time, you have to pay for it. And also it affects your credit. You're pulling the credit for a purpose. That's what it says. And if you're applying for a credit product and if you're pulling the credit, it do bring your credit score down. So in that sense, yes, it will. But on the other hand, if you are logging into your online banking and if you're checking the credit score from there, it doesn't affect your credit score. You can go ahead and check. And yes, the one-time checking with Equifax and TransUnion as well, it is completely free and it doesn't affect your credit score. Hope that answers your question. Next question is it more cost efficient to buy property using a loan or using cash? It's a big question. When you say property, If you're buying a property or a home, if you have the money, great, you can buy it. And as you see now, the market is so high, and you can see that you need millions of dollars, you need 700k. If you have the money, go ahead, it is great. I really wish if I had the money to buy that. But if you don't have the money, you will have to get a mortgage to do that. And there is nothing wrong in having a mortgage. As Farah mentioned, you need the product mix, you need a credit card, you need a line of credit, you need the mortgage. It shows that you're capable of making payments, you're capable of handling the credit products. It also helps you to increase your credit report or credit score as well. So there is nothing wrong in having it.
That's a pretty
Does Monica,
complex
do you want
question. Yeah.
Yes.
I do have an opinion. I mean, everyone has different feelings about how they like to use their money and their savings. But you have to remember, when you have a large amount of cash, the cost of properties in Toronto, the average price is around $800,000. So if you have that cash to buy a property, I think that's fantastic. However, you want your investment to pay you. So I wouldn't say to put your entire savings into that property, because you never know what's going to happen. I'm looking for a property right now myself, and the markets for condos went down. So a lot of people are not getting their value for their money back. It's safer, not necessarily safer, but it's a good idea to diversify your investments. So not to put all your eggs into one basket into your property, but maybe look at other ways to invest that money. And credit is not something that we should be scared of. I know a lot of newcomers come from countries where credit is not utilized and it's frowned upon. That's not the way Canada operates. And credit is actually a good thing if it's utilized in the right way. We're talking about positive credit scores, diversifications of types of credit facilities, and all of these things are fantastic. And we leverage them to accomplish our goals and our dreams. So eventually, when we're retired, we're just living life happy. But it's a good question, because a lot of people don't know or have different opinions, or some people don't believe in interest, and that's okay as well.
Great answer. Great. Yes, that answers the question clearly. Thank you so much, Monica. I'm just going to touch on two questions here real quickly. Is there a formula for calculating credit score? And can you set up the automatic payments for making the full balances? So the credit score is being calculated by Equifax and TransUnion, and the pie chart that we showed is exactly the way that is being calculated. It is not depending upon one equation. We will be taking into consideration, or the credit bureaus will be taking into consideration each one of them, and that's how your credit score is being calculated. Every time when you pull the credit, it goes down. And yes, to make the payments automatically, you do have the option of setting pre-authorized payments towards your credit card, towards your loan. That will be the easiest and the best way, so that you're not forgetting it and you're not missing the payments. I always have it in there. So that is a great question. I really appreciate that you put in there. Now, what are some of the benefits of a good credit score? Great question there. You have a lot of benefits. First of all, lower interest rate for loans if you have a great credit score. Second thing, when you're applying for credit score, it is easier for you to get the loan approved compared to people who doesn't have a great credit score. So that itself makes it easier for you. Like sometimes you will get pre-approved offers if your credit score is great, so that your credit is not being pulled, so then it is not going down while you're applying. So these are some of the benefits, and there are more benefits as well attached to it. I will definitely recommend you to reach out to one of us if you have, or if you want to discuss more about like what are some of the benefits you can get if your credit score is really great. Now, what age should you get a credit card? The moment that you turn 18, that's a sweet spot. You can get your first credit card. I will say that would be the best time as well, because you have time from 18 to 23 or 24 to try how the credit card works, to build your credit history and be on a good credit score by the time you are there to buy a car loan, to get your line of credits, or to get your properties mortgages. So you have time to build it and then be ready to get it. So when you're 18, start your first credit card, and that will be the great option. I know it's 2:30, and comparing to the time of everybody, or like taking into consideration everybody's time. I know that we will not be able to complete the entire questions, but as I mentioned, our QR codes is here. You can reach out to us and we will be happy to connect with you and answer your questions like one-on-one. That being
Thank
said,
you.
I will pass it over to you, Farah.
Yeah, thank
Well,
you.
yeah, I'll
Farah.
just pass it right back to Michelle.
Well, I get the easy job. I just want to say thank you, the three of you, Farah, Nina, and Monica, for coming and talking about skills that are life skills, right? So these are things that if I knew now, back when I was 17 or 18, sort of this information, it would certainly have set me off on a different foot at a much younger age. So thank you so much for coming and sharing your knowledge and expertise, and for also sharing your contact information. It's wonderful if people need to follow up with their questions, that they're able to do so. Again, a healthy list of questions. So you've hit a topic that everyone's very passionate about learning more about. So thank you. And to our attendees, we're heading off to the closing ceremony for the afternoon session, and then back at 5:45 tonight, where we have 2 more sessions. Thanks, everyone. Have a great afternoon. Thank you so much. It was fantastic.
Thank you. Enjoy your day.
Oh, so informative. It's great. It's what we need in all of our classes, right?
It is. It's a great topic. Whether you're born here or not, credit is something that we all need to know. Yeah.
Absolutely. And understand how it's a tool and how to use a tool properly.
And how to use it. Yeah, exactly.
Yeah, for sure. Thank you so much. Have a great afternoon.
Thanks, you too. Bye.
Thanks. Bye.